Our next guest says a retest of previous highs is in fact coming and sees one overlooked group that could outperform. BTIG's chief market technician, Jonathan Krinsky, joins me now. It's good to see you. So we're going for 5,200, a close above that for the first time in a month today. And we may very well get that. What does that mean?
Well, if you go back to April 20th or so, we got some tactical oversold conditions. We thought a bounce was likely, got us back up to 5,200. And then, we said earlier this week, this is kind of Bear's last stand to kind of turn things down. We were looking at the analog back to the last summer, when you had about a 6% drawdown in July. You rebounded back into September, and then you failed and moved lower. And so we should, if that analog was going to play out, we should have really turned lower yesterday. Looks like bulls kind of, regain leadership here. And so, I don't think it's a stretch to say new highs are coming. We're only about 60 points or so above that. But I think more so it's, you have the VIX back under 13, trends still positive. So that's probably the path of least resistance is still higher here.
I mean, this market's confounded you at times, hadn't it? And other technicians too, whereas things look like they're about to roll harder and they rebound faster than many people expected. Is that a fair assessment?
Yeah, and I think it speaks to the internal rotation that's going on. I mean, I think if you think, I think most people would say that technology has been leadership, and certainly has over the last 12, 18 months. But, let's take the last 3 months, for instance. The S&P 500 technology sector is basically flat, while something like utilities are up 18%. So there's just continued leadership, and when one sector takes a pause, another steps up, and that's really kind of what's been the story of late.
What caught my ear of what you said a few moments ago is this might be the Bears' last stand. Can you expand on that? Because, the Bears have felt emboldened at times when it looked like they may be regaining something, and then they've been steamrolled again.
Yeah, I mean, like we said, we had that 6% drawdown in April, rallied back to a level where, again, if we were not going to make new highs, it was likely to turn lower this week, and it appears that didn't materialize. So, doesn't mean we can't have pullbacks or shallow dips, but I think that, if we're looking for that playbook with like a 10 to 12% drawdown like we saw this last summer, we're probably going to have to wait a bit longer for that, and probably from higher levels at this point.
You look at some charts, you say the gold miners look especially strong. Tell us more.
Yeah, I mean, gold miners continue to act well. They're actually, outperforming the market year to date. Probably not a lot of people realize that, but they had a massive move over the last 2 months, basically consolidated for the last couple of weeks, and now they're kind of reasserting themselves and breaking out higher today. Silver's outperforming gold, so those are things you want to see. Real yields coming down. Those are all constructive aspects to the gold trade. But yeah, it's a good looking trend, and we'd expect higher prices for the miners here.